Welcome everyone back to Pete's Investing Updates. We review the weekly progress of some blue chip stocks from Australia, the US and Europe. And these are updated every weekend after the week's performance. This week we're going to be looking at been persevering with our strategy. As our profits remain strong. So as always, don't forget to hit the subscribe button, notification bell, and like this video to support the channel. And don't forget to review the playlists, and so we review the weekly indices and also the weekly updates of the blue chip shares we review. And this is the video of that share review, but also a strategy playlist where we include all our simple trading strategies, the average down process, and some money management ideas. First, let me just talk about the what we're looking at in terms of the charts. This is the price chart. As you can see, it goes back to about 18 months, 17, 18 months for each of these charts. Here we're looking at the CBA, Commonwealth Bank of Australia, and each of these charts we're looking at the 15-minute time frame. The top chart here shows a profitability, and our $100,000 baseline is on this black line here, and that's begins back here. So that's the top chart is profitability for buying and selling the shares. And the second chart here is profitability of buying and holding. In other words, we don't sell the shares, we just hold it, and how that compares in profitability compared to the buy-sell strategy. You can see here the buy-sell strategy is returned over the 17 months, $1,036, and that includes brokerage. Whereas the buy and hold strategy, that means we haven't sold them any, is returning so far $448. This is a price chart, as I mentioned, and down here is our CCI 100 indicator, which we use as a key indicator to enter and exit as one of the criteria. So let's first look at the this week's performance. You can see here the CBA as of Monday has gone sideways in terms of price movement. It dropped suddenly below the MA200 last week and has remained there and tracking the MA200. We're still open with the other positions back here where we opened up about 2 weeks ago. Had a bit of a spike there, but then it's fallen below, but we're still maintaining 19 shares holding. And again, each of these we're trading $2,000 lots of shares. So every $2,000, how many shares we can buy with that $2,000 lots. So as you can see here, it entered the market once the CCI 100 moving average broke above the zero. But we haven't realized profitability, so we're holding on to that at the moment. Next, we look at BHP Australia. As you can see here, it had a bit of a drop last week, but then it rose again start of this week, and it's been maintaining that against this little consolidation point back here above the MA200. But again, this position has been held now, going back to the 8th of March. We entered in 40 contracts or 40 shares. We've been holding that for the moment. Next, we look at Volkswagen. Again, this has been consolidating sideways, but below the MA200. And as you can see here, we entered here back on the 14th of June. We entered 6 contracts, 6 shares. We held it as it fell down below this point here, and we realized another number of contracts. So now we've got a total of 14 shares held. So we averaged down at this point here. So the average down process, the way it works is, again, don't forget to look at my simple trading strategy and average down videos to get a better understanding and deeper dive. But very basically, we allow the price to drop on average 2 times the highs and lows. So this indicator here shows, as of this point, a little blue line there, it shows 5 points or $5. You can see the overall average 505. So what we're saying is we want it to drop at least $10 before we enter any further positions. And also we wait till the CCI moving average breaks above the zero before we enter. So 2 criteria: it must fall at least 2 times the highs and lows of the past 90 days, and it's met that criteria there, and then the moving average is broken above zero. That's what that indicator shows there. We enter another set of shares, or $2,000 worth of shares there. So now we're holding about 14 shares on Volkswagen. Next we look at Telefonica. So this was opened up last week. As you can see, the share price has dropped, but then it's appreciated and grown above the MA200. So that's still holding 500 shares there, or $2,000 worth. So we haven't reached profitability yet, so we're just still holding that in a holding pattern. JPMorgan. This opened up late last week. Just to that point there, we bought on the 23rd of June, we bought 14 shares. And the price has been doing quite nicely yet, but it hasn't reached our profitability level. But also our CCI 100 hasn't broken below the zero. So we have to wait for both that criteria, profitability plus the CCI breaking below the zero, to close out. But so far, this trade is looking good. Next, we look at Johnson & Johnson. Again, this was opened up back here on the 14th of May. It broke down below the MA200 initially. Had a bit of a downward motion there. But then this last week, it's gone quite nicely and broken well above the MA200. And it's reaching our potential profitability level. So you can see there where it opened, that's our profitability. So it's just touching just below the profitability level there. Hasn't broken profitability yet. But also the second criteria is it must be profitable, but also break below the zero CCI 100. But that's a good move so far this week, and hopefully Johnson & Johnson does continue its rise. Next we'll look at Caterpillar. This is moving in a very sluggish motion, but as you can see here, it entered back on the 15th of May, near the highs here. It bounced along the MA200 for a number of days, then it broke down below quite drastically. And as a result, because it's broken down quite sufficient enough according to our rules, it's broken down twice the average of the highs and lows of the last 90 days. And then it's finally broken above the CCI 100 there. And it's met a secondary criteria to enter more contracts or more shares. So now we're holding 17 or 18 shares, or $2,000 worth at that point there. But as you can see there, since the opening, we're still a way off from our profitability level. So in summary, this is what it's returned in both Aussie dollars, euro and US dollars for the buy and sell strategy versus the buy and hold respectively. Overall for the 17-month average, and that's what the 17-month calculation there shows, we've returned $7,100 for the buy and sell strategy, whereas if you just held those positions, today it'd be worth just under $5,500. That shows you the percentage returns for each of those respectively. And that what it shows us there is the 7,172 divided by 17 is 444 is the monthly average revenue. So far it's looking good. That's been tracking consistently since we've started trading these shares back in January. We've been returning about $400 to $500 on average a month. So again, don't forget to hit the subscribe button, notification bell, and like this video to support the channel, and we'll speak to you guys in next week's video. Thank you.